Hey there, hope all is well. Back at you again today with some more RTD news updates. And today's articles all deal with the current events happening in Saudi Arabia and my thoughts on how this will impact the dollar. And as always, if you find today's articles to be informative, feel free to share them with family and friends to help them become more monetarily aware. As well as if you're new to RTD, click the subscribe button for more RTD news updates as well as interviews. Let's get into today's articles. Here's the first article from Forbes, and it's "We're doomed for bankruptcy unless changes are made," says Saudi official. Next article from the Gulf News in Saudi Arabia, it says "Idle workers, inevitable cuts, ministers grade Saudi economy." The next article we have is from Reuters, or from RT, I'm sorry. "Cash-strapped Saudi Arabia switches to a Gregorian calendar to pay civil servants less." The next one's from the Times. It says lazy Saudis are on the brink of bankruptcy. Next article from RT. "Saudi civil servants work 1 hour a day. We're headed for bankruptcy in 3 to 4 years," says their minister. And the last article is from Reuters, and it's about Saudi Arabia sets record with mammoth 17.5 billion bond issue. So let's get into these articles. Here we have the first article from Forbes, and it's entitled "We're doomed for bankruptcy unless changes are made," says Saudi official. So here it has a picture of the financial minister there, or civil service minister rather, mentioning not long ago in a press conference that bankruptcy was pending, depending upon getting things in line. So just to give you an idea of what this article is about, it says it's common knowledge for anybody that follows international news that more than 2 years long crash in global oil markets has caused pain across the sector. Oil majors have lost billions worth with over 350,000 layoffs in the sector globally, while oil-producing nations, ranging from U.S. shale oil producers to OPEC members, two of the world's largest oil producers in Russia, have felt the pain. Then it gets into Saudi Arabia's problems. Saudi Arabia, once thought immune to any prolonged downturn in oil prices, has also felt the pinch as prices have trended downward from 115 per barrel in mid-2014 to a low in 20s in range of January, followed by a rebound to the highs of 40s and now to the 50 range. The kingdom ran a record high budget deficit of 98 billion last year, with an estimated 87 billion deficit forecast for this year. And a couple other reports I read, it mentioned that it was closer and well above 100 as far as their budget deficit. Low oil prices have hit Riyadh's state coffers so hard that it made its first bond sale just recently. It says in order to rein in expenses, the government has down what once was thought unthinkable, cutting costs and expenditures. At the beginning of the year, Saudi state media reported that the finance ministry would cut spending, adopt new taxes, and reduce price subsidies for fuel, water, and power. And so another page if you're interested. But other than that, just painting a little picture that because oil prices are so low, they're not making money. And being at their oil economy, they are struggling and in the process of making some changes. So articles below if you're interested. Here's an article from the Gulf News in Saudi Arabia. And it's just more insight as to what's going on there and the changes that's being made and why. It says idle workers, inevitable cuts, minister grades Saudi economy. Officials say his kingdom would have gone bankrupt in 3 to 4 years without recent austerity measures. So just give an idea as to how this article came about. This is from Riyadh. It says Saudis who switched on a popular talk show last week to listen to officials explain why state employees had their take-home pay cut were in for a shock. Within minutes of the start of the NBC One's Al Damina program, viewers were told that the public sector was bloated. Civil Service Minister Khalid Al-Araj said state workers were productive for no more than an hour a day, but see their jobs as a right. Mohammed Al-Tuwajid, the deputy economy minister, said without the recent austerity measures, the kingdom would have gone bankrupt in 3 to 4 years. Our reliance on oil is a pure dependence, Al-Tuwajid said, and economic diversification is basically non-existent. The hour-long broadcast, which also featured Finance Minister Ibrahim Al-Assaf, was an unusual attempt by a government to promote its plan to cope with the plunge in oil prices. The measures have so far focused on slashing spending on projects as well as trimming the public sector wage bill in an attempt to lower budget deficit that ballooned to about 15% of economic output last year. The ministers were attempting to reassure their domestic audience that there's a plan in place rather than just random cuts. As an analyst said, Al-Tawaj used the phrase that they're confronting a bitter truth, he said. They're trying to communicate that to the populace. And so basically, oil is down. They're not making money. They're all dependent upon oil sales. And so they're in need of money. So they're, making cuts in certain places. And it's affecting their lifestyle because from these articles here, it shows that it reflects that the Saudis don't tend to work for their due, their pay over there. So interesting article, a lot more details if you're interested. Just scroll down below. Here's an article from RT that just shows more of the austerity measurements that they're taking by actually switching the calendar to impact, the pay that they pay their servants there. And so it says, cash-strapped Saudi Arabia switches to Gregorian calendar to pay civil servants less. So here you have a picture of a young man holding up their currency there. It says Saudi Arabia civil servants will lose 11 days of pay after the country switched to the Gregorian calendar, the predominant format for organizing time in the West. The switch is part of austerity measures meant to curb the budget deficit. Previously, only the private sector of the Gulf monarchy used the Gregorian calendar of its oil customers to calculate salaries, while the public sector has used the Islamic lunar Hijri calendar since 1932. So that's a major change right there when they switch their, their calendar, their Islamic lunar calendar for a more Western-based Gregorian calendar, just to save some money. So under it, it says a year comprises of 12 months lasting 354 or 355 days, or 11 days shorter than a Gregorian calendar. The salaries are calculated on an annual basis, so a longer year translates into less payment for the employees. It says the last switch into force on Sunday, the last day of the year, 1437, and is part of a wider austerity effort that the Saudi government is enacting to cut budgetary spending, reports Gulf News. So interesting. They're switching the calendar up just to pay their employees $11 less in pay, or 11 days rather, less in pay. So interesting article. If you're interested, scroll below and check it out. Here's an article from the Times, and it's entitled "Lazy Saudis Are on the Brink of Bankruptcy." And it's a real short article, but what was interesting is that it says the bloated public sector, which employs more than 70% of the workforce, is woefully unproductive, according to Khalid al-Raj, the civil service minister. He told the state employees, many of whom had little incentive to work, barely put in 60 minutes a day at the office. They had very little incentive to work because they're provided for by the king there. So the bloated public sector, which employs 70% of their workforce. So 70% is employed by the monarchy. That's interesting. So interesting article. If you're interested, check it out below. Here's an article from RT that gives a little bit more of a different perspective on it. And then it's also interesting how it has a picture of a gentleman sitting at a desk with his feet propped up, just looking at a screen, kind of, playing into the whole idea of working just an hour a day. And so it says Saudi civil servants work 1 hour a day. We're headed for bankruptcy in 3 to 4 years. And then just to scroll down and give you an idea of the breakdown of that. It says prior to recent reforms, even a conscientious Saudi national civil servant had generous perks, a 35-hour working week, almost no prospect of being made redundant, and frequent bonuses such as two monthly salaries paid to every bureaucrat when King Salman ascended to the throne in early 2015. So here you have a picture here. It looks like it said, in my ministry, we have more than 1 million job applicants. Of them, 200,000 are already working in the private sector and are prepared to take pay cuts, said Al-Raj. With the economy expected to expand by only 1.2% this year and oil prices hovering at around 50 a barrel, Saudi Arabia's vast oil reserves will still stand at over 500 billion, have been depleting at an alarming rate. If we didn't take any measure reforms, and if the global economy stays the same, then we're doomed for bankruptcy in 3 to 4 years, said Mohammed Al-Tawaji, the economic minister. So interesting. It's they're actually putting out all these figures saying in 3 to 4 years, which would lead me to believe it's be a lot sooner than that, because their oil reserves may not be as strong as they're proclaiming, according to a lot of other sources. So interesting article. If you're interested, it's below. So here's the last article here from Reuters, and it kind of wraps up just the struggles that they're facing, that they are actually entering the debt market as far as issuing bonds in hopes of cutting into some of that budget deficit for next year. And so it says Saudi Arabia sets record with mammoth 17.5 billion bond issue. So it's a lot of money that will cut into their deficit. But yet, if they're running close to 100 billion a year, making bringing in 17.5 billion doesn't really make that much of a difference overall. It just puts them further into debt. But assuming that oil prices will go back up, I guess they figure they'll be able to pay it off with no problems. And so just give you an idea what's going on here. It says Saudi Arabia conducted the largest ever emerging market bond sale on Wednesday, selling 17.5 billion of debt. They sold debt. That's amazing. And the government's first international offer while attracting investors, orders totaling almost 4 times that amount. The huge demand, larger than many market participants had expected, was partly due to ultra-low global interest rates and funds, frustration with a lack of high-yielding assets around the world. But the sale was also a success for the world's top oil exporter in its efforts to convince investors that it can cope with an era of low crude prices, ultimately reduce in dependence on oil. London-based Capital Economics estimates that the U.S. dollar issue would finance around a third of next year's state budget deficit and almost all of the kingdom's current account gap, meaning its foreign exchange reserves were unlikely to fall much further in the coming year. So basically, by them issuing these bonds, they're trying not to dip into their dollar reserves, which unfortunately they will have to anyway because this bond issuance of only can cover 1/3, so they're gonna have to get the money somewhere, and it's gonna mean their reserves. And so, just give you more information, gives you the breakdown actually here of how it all prices out to 17.5. It says the bonds were priced more cheaply for Saudi Arabia than many investors had expected. A 5.5-year tranche was launched at 135 basis points over U.S. Treasuries, so trying to make it a little bit more attractive than U.S. Treasuries, which drew in 5.5 billion. Then it says another 5.5 billion in 10-year tranche at 165 basis points over Treasuries, and a 6.5 billion 30-year tranche at 210 basis points over. And then what's interesting, it says that bankers were particularly surprised by the pricing of the 30-year tranche, given uncertainty about the future of the energy industry in the coming decade. So, interesting article here, but yet to conclude all this and to summarize all this into more meaningful terms in relation to the dollar, Saudi Arabia is in trouble. They're not making money because they're dependent upon oil. Oil prices are stagnant, if not, going to fluctuate around 50. It may go down, you never know. But they are strapped for cash and funding all of their expenditures, primarily taking care of their people. And so they're making all these cuts, trying to, cut back on spending. But ultimately, as I mentioned in a prior news update, they're selling treasuries anyway. They're going to have to sell more treasuries to kind of tap into this deficit that they have, which means that puts pressure on the dollar because they'll sell treasuries, get dollars, and then they'll continue to buy and fund their operations. But that means all those dollars will eventually come back to the U.S. as they begin to sell some property and stock and things they're invested in here to fund themselves and keep themselves afloat while oil prices are down. So it's not good news for the dollar at the end of the day because, once again, eventually another thing they might end up doing is opening up oil sales in other currencies beyond the petrodollar. And once they do, which it is a matter of time, once they start accepting yuan and getting involved in the whole SDR, yuan-backed bonds and things like that, that puts more pressure on the dollar because at the end of the day, the world's diversifying away from the dollar, and that leaves United States citizens and those who actually, depend upon the Federal Reserve note as their medium of exchange. It puts us in trouble. So that's what this wrap is all about, and this is why Saudi Arabia's news is very important to the dollar. So hope you guys enjoyed this. Leave me a comment below. Love to hear your thoughts. If I missed anything or should include anything, feel free to let me know. Always down to learn some things myself. And also, if you're new to this, subscribe and get more RTD news updates and interviews. So have a good day.